Uh, Before we begin, can everyone just let me know if they can hear me? Just pop a message in the chat if I'm audible.
All audible this side.
Okay, thank you. Good evening, everyone. I welcome you all to another edition of Wealth Sunday, where today we are going to be discussing a highly anticipated topic. And actually, it's two topics that we're going to be discussing. Because as you know, on the group, we had a poll where we asked everyone what you would like to know. And in the first place, the education-wise, it was entry models. But as the Wealth Chaser team, we felt like you can't really know entry models if you don't know how to find direction. So we chose to bring both to the table. And before I start now, let me just quickly share my screen so that you can see the document I have here. Okay, just let me know if you can see my screen. Then we can begin.
Yeah, we can see your screen.
Perfect. Okay, so today we're going to be talking about mastering direction and entry. So this is understanding your direction, your higher timeframe bias, and your entry models as written over there. I didn't even notice this camera of mine here is on. Let me just turn it off for now. Okay, so moving on to the second slide here. As you can see in the contents today, we're going to be talking about understanding higher timeframe bias, identifying potential direction in the market. So this is underlying with your higher timeframe bias. We will be exploring entry models, and we will also end with some practical tips on how to utilize these entry models in the live market. So firstly, understanding higher timeframe bias. Higher timeframe bias refers to identifying the overarching trend or direction in the market based on larger timeframes. So this is basically you going into the charts and trying to gauge where you think the market's going to go on that day. This is usually done on your daily time frame or your weekly, sometimes even the 4-hour. Now, this is important because it helps us align our trades with the market's momentum or the market's trend. This reduces the risk of counter trend trades. As you probably all know, the famous Forex saying, the trend is your friend. If you utilize daily bias into your daily trading, you're going to ensure that every time you take a setup, it is in line with your other time frames. You don't want to take a bullish setup on the 5 minutes, but your 1 hour is bearish, if you get what I mean. So the key tools that you're going to be using here are your daily, your weekly, and your monthly candles. And you'll also be using an intermediate time frame to analyze your market structure. We will also be blending PD arrays such as fair value gaps, order blocks, and liquidity in order for you to use these in your daily bias. So these are the steps to determine your higher time frame bias. You can start by using daily bias through your PD arrays. So you can look for fair value gaps or order blocks or rejection blocks on your daily time frame, and you can use this as your bias. As you can see here on the examples to the side, I used the liquidity here to find a bullish bias. Right here was the example of how price looked like first when I expected this liquidity to take it higher. And on the other image right there, that day was bullish. So on a day like this, where I anticipated us to be bullish from the liquidity, we would have been right there and we would have been able to gauge an entry model of that liquidity. So you can not only use liquidity, you can look at daily fair value gaps, you can look at daily rejection blocks. All of these can be used to identify whether or not today we are going to be going up or down. Moving on to the next slide here, it shows that we can use daily bias through candle closures. Now, this is personally my favorite way of identifying a daily bias. This is very nice because you can look at what is going to happen this specific day. So even if you are in a bearish trend, you might be able to catch a bullish retracement on this one day because of candle closures. Now, how this works is we analyze the previous day's candle and the candle before that. So basically, we are trying to look at whether or not the candle, yesterday's candle, closed above or below the candle before that. So if yesterday closed above the day before, we are bullish. We will be bearish if it closed below the day before. And you can also use wicks. Like as you can see here in this example, I was using the wicks. So we will be bearish if we wick above the day before, but we fail to close. And we will be bullish if we wick below the day before. Now, in this example right here, you can see that we wicked, yesterday's candle wicked below the day before. So today I would be anticipating bullish price action. And as you can see on the other image, the day was bullish. And if you can notice, this is the exact same price action from the other example. And this shows that you just need to use what you can see easily. It doesn't matter really what decision you take, whether it be the liquidity or the candle closures, both of them can work on the same price leg to give you a correct trade. Now, how do we use entry models? And these entry models are specific to SMC or slash ICT, which is what I personally use. Now, why do these entry models matter? They provide precision in executing all of your trades. You don't just want to place buy because the day is bullish. Anybody can tell you that the Nasdaq is going to be bullish, but it's a different thing if you have to go in and actually place that buy. So these entry models provide the precision in executing that buy trade, even if you know that the Nasdaq or the Euro USD, for example, is going to be bullish. They minimize the risk that you can potentially take and they maximize your reward. Now, what does this mean? You will be putting your stop loss on a 5-minute low and your take profit on a 1-hour high. This allows you to hit those very high risk to reward trades because your stop loss is small and your take profit is high. Now, you must use this time frame alignment written below to ensure that all of your time frames are in one direction. Now here, these blends are the weekly, the 4-hour, and the 15-minute. You can also use the daily, the 1-hour, and the 5, which is for your intraday traders. Then you can use the 4-hour, the 15, and the 1-minute, which is for like your scalpers. Because remember, like we said, you don't want to take a bullish trade on the 15-minute, yet your 4-hour is bearish. You want to wait for when the weekly is bullish, the 4-hour is bullish, and the 15 is bullish. This is where your highest probability trades occur. Moving to the next slide here, we are looking at types of entry models. Now, the first one here is a very popular one. It's the one that many SMC and ICT traders are first exposed to, and this is the 2022 model, where you look for a sweep of opposing liquidity. So in this example, I am fairly bullish based on my daily bias. I derive that I'm going to be looking for buys this day. So if I'm looking for a bullish idea, I'm going to find bearish liquidity that can be swept. And when we sweep this liquidity, I look for a shift in market structure, which is also seen there as the MSS. When that occurs, I'm going to look for a retracement to a fair value gap. Other people prefer an order block, others prefer a breaker block, but I'm looking for some type of retracement where I can place those buy limits and enter. So here, as you can see in this example, I would have entered on the fair value gap that's shown right there. This is a very popular entry model, and a common issue with it that makes ICT traders not like it very much is that you tend to use it as a pattern. And when you start pattern trading, that's when it will stop working. Now, to avoid pattern trading, you're going to use the exact daily bias that we were talking about in the previous slides. You don't just want to place buy because the 2022 model is there. You should place buy because your daily is bullish, your 1-hour is bullish, then there is a 2022 that's bullish on the 5-minute. This will ensure that you are placing based on an idea instead of a pattern. With SMC and ICT, we are not essentially pattern trading. We are trading an idea. Now, going to the next example here, you can see this is the unicorn model, which is another very popular entry model in the ICT space. This one is almost similar to the 2022 model where we're going to look for a sweep of opposing liquidity. Then we look for a market structure shift. Then the difference right here is that instead of entering only on a fair value gap, we're going to be taking a look at a breaker block. So a breaker block is the last candle before the opposing move. Now, if you can look at this example, this is a bullish example right here. You've got these two bullish candles before the bearish ones that take the liquidity. These two candles are what you call a breaker block right here. You're going to look for a fair value gap that aligns with this breaker block, so they have to overlap. Even if only a piece of the fair value gap and a piece of the breaker is overlapping, you would place your buy limit on the overlapping part right there and your stop loss below the breaker. This is a very high confluence entry simply because it's utilizing liquidity, fair value gaps, breaker block, and a market structure shift. All of these things add confluence that the market is ready to move in your direction. Now, another example of an entry model here is a growing one. This one right here is not as popular yet, but it's increasing very rapidly. So this is called the IFVG, and we've spoken about it before here on the Wealth Sundays. It is where you look for your points of interest to be hit, whether that be on your 1 hour or your daily. Then you're going to look for a bearish fair value gap, the one that's not going into your direction. And you wait for price to disrespect that fair value gap. As soon as price disrespects that, you can either enter on the IFVG or enter immediately at the close of that disrespecting candle. Your stop loss is below the low, and your take profit is wherever you target. Now, these are examples of entry models that you can use to ensure that you are getting the most out of your trades. And remember, like we said, don't treat this as a pattern. Don't only place buys because you see an IFVG. Rather, try to build an idea every time you trade. Because when you build an idea, this will ensure that you've got a high win rate and a high probable strategy. Now, how do you effectively use these entry models? You're going to look for all of these entry models inside higher time frame PDRAs. So what does this mean? You want to be, if you, for example, are entering on the 5-minute time frame, you want to look for these entry models in the 1 hour fair value gap. As you can see on the example there to the right, I'm using a 2022 model, it appears to be, with a breaker block instead of a fair value gap. And what made me look for bullish setups was because I was in a bullish 1 hour fair value gap. So I had a reason to look for this model. If I did not have a reason to look for it, I would have not placed it. If there was no fair value gap and I just saw the 2022 model, I would have been skeptical on placing it. Now you can look for these entry models on higher time frame fair value gaps or even in order blocks. But all of these can be used for you to have a reason to place the buy button when you're trading. You should also look for these entry models in the direction of your daily buys. So if, for example, on the daily time frame you are bullish, you shouldn't take a 1 hour bearish setup because that doesn't align with your daily buys. Only look for bullish entry models when you have a bullish bias, and only look for bearish entry models when you have a bearish bias. This makes sure that you are always trading in the right direction and all of your time frames are saying one thing. You're not in a situation where you are bullish here and you're bearish there and you're bullish on the other time frame. That's what makes time frame alignment so important in entering the market with these entry models. Now, all of these entry models are here in this PDF that I'm going to link on the group when we are done here for you guys to reference and look back to. You should not try to learn them all and instead take the one that is easy for you to see. There's no setup that doesn't work. Even if it's not ICT, if you can clearly see a support and resistance model, then you should take it with the bullish bias. That ensures that you are going in the right direction, if you get what I mean. Now, moving on to the next slide here. These are the practical tips, especially for ICT traders. Patience is crucial. You should not try to force the market just because you see that 2022 model. Rather, wait for the market to come to those specific zones of yours. Stay disciplined and stick to your plan to avoid emotional trading. And finally, you should backtest your strategies. Test your approach on historical data before trading live. I always tell our students there at Wealth Traces that you shouldn't rush to add money into your account. You shouldn't rush to fund. rather get to know your strategy. You should be able to answer questions like what is your win rate? When are your best trading days? What's your average risk to reward? These are questions that every single trader should be able to answer. And there's no other way to answer it than back testing and going to collect that historical data before you fund your account. So remember, traders, don't be hasty to fund an account just because you want to quickly make money. If this Forex game was easy, then we would all be rich, but it's not. So you should take the time to learn about your strategy, to realize, is this working for you? Can you see it easily? Or should I rather move to something else? Now, we have now reached the conclusion of this PDF of mine here. I thank you guys for being here. And before I give the reins over to my other partner now, Gadi, I'm just going to give you guys 5 minutes for any questions that you may have. We can also run the Q&A back when my partner is done, but this is for any immediate questions that you guys may have on the entry models. And like I said, we will be linking this PDF on the group. So for any trader that has a question, they can ask it now.
Yo, Mags, sure. I hope you're good now.
Yes,
Um,
sir.
I just have a question on the daily bias side. Can you please just quickly re-explain the previous day closure parts?
Okay.
Because I'm a bit confused on that. Yeah,
So
thanks.
let's go back to the have I gone too far now? Let's go back to the candle closures. So when you're talking about this right here, let us I don't know if you guys can see my cursor when I move it around. Is my cursor visible? Or is it just a
Yeah, yeah,
blank
yeah,
screen? My cursor is visible.
yeah, yeah, yeah.
Okay. So with
Yeah,
candle closures, you coming, let's make an example and say this is Monday and this is Tuesday. So you are coming into the market on Wednesday and you want to know, are we going down or are we going up? So with candle closures, you want to see, okay, did Tuesday close below Monday or did it close back in the range? So if this candle closed here, I would have been expecting price to continue going lower. But as you can see, we could only wick, we couldn't close. Tuesday closes back inside Monday's range, which means when I go into Wednesday, I'm going to expect Wednesday to climb. I'm going to expect Wednesday to be bullish, at least to Tuesday's high, at least. It can reach Monday's high again, but I'm expecting it to at least reach Tuesday's high. And just like that, I've got a bullish bias. And take a look at it from here. If we can say this was Friday, Friday closes right here and it continues. Monday does the same thing. Here, it does not manage to close. And maybe it will even be easier if I can bring in a chart like this. I don't know if you guys can see the chart before I continue.
yeah,
Okay,
yeah,
Yeah.
we
so
can see.
so if we're talking about candle closures, right? And this is on replay. I could have entered the market here expecting it to be bullish because it closed above that. So I know that we can at least go past this. I don't know if we'll go all the way to this high, but I can at least get there. So on this day, I will be bullish. And if we can play a candle, you see the wick does move up a bit and it closes back in the range. So now on the next day, where is my target? That's my new target. I'm bearish now. Let me delete this. So I'm bearish and look at this. It's bearish. Does it close above this low? No, it doesn't. It closes past. It can't close back in. So now I'm bearish again to this low. Let's see. And it goes down. Same thing. Did it close inside the range or did it close outside? It closed outside. So now on this day, my target is here. And what do we see? Same situation. It closes past and I was bearish, so I'm going to expect this to be taken. And it's taken also, but it closes back in this range. Now, when it closes back in the range, this is where I now say, okay, we might potentially be bullish. I start looking for targets. Am I going to target up there? Let's take a look. And price does go back up. Now, this is how candle closures work. And this is a good way to actually Learn it. This is a good way to practice it. Just go into your trading view, pick a random time, and just do this. Does it close above or does it close back in? If it closes back in, you're bullish. If it closes out, you're bearish. And just keep doing it like that. And now with this example, does it make a bit more sense?
Oh yeah, it does. It makes so much more sense. Thank you, boy.
Yeah,
Thank you.
this, in my opinion, is the best way for you to grasp daily buys because you'll be able to have the exact buys just for Friday or just for Thursday here, just for Wednesday. These are the kind of closures. Do we have any other questions? I will give the floor 2 more minutes before I give it to Gadi to continue the meeting. Yeah, I think everyone is clear for now. If you're still having time to think, we will track back to the end. So this is the end of my presentation right here. And I just want to check, Gadi, are you ready? I will disconnect my screen now.
I'm ready.
Okay, that is perfect. I've disconnected. Stage is yours.
I appreciate it. That was a good one from Max Gents. If you didn't hear anything he said in his whole PDF, I just hope you guys just take one thing from him, just one thing, and that's backtesting, the importance of backtesting, knowing what you're looking for in the markets. Because once you understand what you're looking for in the markets, the money automatically comes to you. So I just hope that comes to you and you understand that. Okay, so good evening, guys. My name is Kadi. Today I'll just be doing market outlook, weekly outlook. I'll be looking at the euro dollar and dollar. Let me just try to share my screen. Wait, Max, can you please unmute? Max, can you please unmute? Send a request to share my screen.
I've accepted the request.
Okay, sweet. Please let me know if you can see my screen. Can you see my screen?
Your screen is visible, yes.
Okay. Okay, so right now what I'm looking at the dollar, I'm seeing bullish signals right here. But since this is the last week of January, I'm really looking very closely at how the week will close because I'm really focusing also on this FVG right here. If price does not seem to displace above this previous month's high, I'll be looking for price to rebalance this favor the gap and then hit high. But my overall idea on the dollar is bullish, and I'm looking for more bullish entries. When I move it down to the weekly time frame, I'm seeing price rebalancing this fair value gap right over here, and also touching this order block right here. So now my ideal bias for the dollar is bullish. If I see price respecting this zone here and this order block, I'll be looking for bullish entries. So I already know what is going to be my next weekly candle. I'm anticipating a bullish candle. So I'm going to be looking for more bullish entries. Now, when I move it down to the daily, I'm seeing price sweep sell side liquidity just last week. So what I'm waiting for next is for price to give me a market structure shift here at this high right over here. And once I see that, I'll be looking for more bullish entries. I will scale in some more entries later on in the week and give you guys my ideas, but that's so far what I have on the dollar. So I'm looking for bullish ideas. Since I'm seeing the dollar going up, I'm going to look for euro dollar to go down. And since I'm looking at that high on the dollar, I'm looking for this low on euro dollar. Okay. That's our liquidity. Since I'm getting that idea, I'm gonna break it down to the weekly. The weekly also tapped into an order block, so I'm looking for more bearish ideas. So my next most likely weekly candlestick will be a bearish candlestick. So since I already got that idea, since I already understand where is price more likely to gravitate towards, I'll be looking for those bearish ideas. Again, on the daily time frame, sweep of liquidity right over here. Sweep of liquidity right here. And to confirm a change in direction, I want to see this market structure shift right over there. And yeah, once I see price take this market structure shift, I'll be looking for bearish ideas, and I'll send my entry ideas later in the week. Thank you. If there's any questions, please ask your questions. Very open to answer them. Like there's no questions, I think we'll wrap it off here.
I think everyone is happy. We can call it a successful meet. And like we said again, we will be sending this information to the group for anyone that wants to reference. I'm about to export the PDF now. We will remain me and Kadi for 2 more minutes, maybe until 19:03 for any last minute questions. But I think from here, everyone can now leave. Can call it a successful Wealth Sunday. Thanks, guys. The recording.
Any ask me only fine.
I see you've asked the question. The recording will be posted on our YouTube channel. We are going to be uploading and giving more information on that on the group. So just keep your eyes there. You will have this recording. It will probably be posted on our YouTube channel.